Thanks, Oliver. And joining me for today's Options Insight is Scott Bauer. He's Senior Market Strategist at Trading Advantage. He's out in Chicago at the CBOE. Scott, once again, we had sort of a little head fake towards an increase in volatility. Now we're back to this tight range and low volatility. You say it makes more sense to just sort of focus on individual stocks and maybe make a play there and avoid the big picture. Why is that right now?
You know, you just hit the nail on the head. There's been so many head fakes. You know, common sense for just, the average person out there would say, you know what, we're in an environment right now with you never know what's coming out of the White House. You don't know what's happening internationally. You would think that there should be more volatility in the marketplace up here, especially with, being at all-time record highs right now. And it's just, we're not seeing it. We're not getting it. Volume is still pretty light. So for me, as an options trader, I want to be in the spaces where the individual stocks that are in the news, a la an Amazon reporting after the close today, Facebook yesterday, other stocks like that. And I'm going to talk about HIG, which is another earnings play. I think you're better off sticking to those stocks, either making a play prior to earnings or just afterwards than trying to predict what's going to happen in the overall market right now.
So let's get to that trade that you mentioned. It's on Hartford Financial. It's funny that you picked an insurer. They don't tend to swing quite as wildly as, say, an Amazon, for example, here. So what are you expecting out of this earnings? What kind of price action are you looking for?
Yeah, definitely not as sexy as an Amazon, but Hartford has been hitting on all cylinders. They've kind of revamped their model. They've had a great reduction in cost. They've done some great things on the marketing end of things, and like I said, they've been hitting on all cylinders. Technically, we're at a 50-day moving average here. Great support area. I'm looking for price action to the upside. I'm buying the 48.5-51 call spread going out to regular February expiration, which is 2 weeks from now. I can do that in a 75-80 cent range. It's $2.50 wide. That's what the spread can go out to. Now, the option market is looking for a move on earnings today of about $1.75, $1.80 or so. So if we get that move, and it is to the upside, we're going to be testing those highs. We're going to be that $51 kind of upper limit there. And again, I think even if they don't have great news, unless they, just come out and get crushed their guidance to the downside, there's major support in this stock here. So technically, fundamentally, looking for the up move in Hartford.
Hey, just quickly here, Scott, not just Hartford, but the financials generally, really the market generally, after the post-election up move, has sort of been just drifting along here. Do you expect a bigger breakout, not just for Hartford, but maybe for the rest of the financials also?
I do, and you just hit a great point. They've just kind of been drifting, so they're actually setting a base for the next move, and I think that next move is going to be higher. Obviously, rates are going higher. Fed's behind us, so, there's nothing imminent right now, but the rates are going higher, and I think that this drifting that we've seen across the banking and financial sector is making a base for that next move higher.
All right, Scott Bauer, we'll be watching HIG. We'll be watching the financials more broadly. Thanks so much. Appreciate it. Scott Bauer of Trading Advantage out in Chicago. Oliver?
Thanks, Julie.